For our COBT listeners and viewers, it's Maynard, Mike, and Arjun here with installment 3 of our NAPE COBT series. It's been a big week in Houston. It's a big week for oil and gas overall. We started the week talking with David Batt of Kimberlite, and we got into the productivity subsurface, exciting things happening, all the productivity gains that are on the horizon, all the ones we've made. Yesterday, we had a great session with RBC talking about the market for assets, particularly in the lower 48, but we had a great discussion on what it's like to try to buy something in today's world. And we're going to cap it off here today, show number 3, with Ruaraidh Montgomery. He's the head of energy trends and analytics at Welligence. We know them well. It's a great startup company. It's been around for a while now. I don't know if I can still call you a startup, Ruaraidh. We at Veriton are very pleased that we have a small investment in Welligence. Arjun's on the board. Ruaraidh, maybe that's why you returned our phone calls. I'm just teasing you. But today's topic is exploration. And one of the reasons why we as a firm were so interested in Welligence is we do think there's going to be a return to exploration in a lot of places around the world over the next decade. And Ruaraidh's going to show us maybe we're right, maybe we're wrong, but we need to talk about it, Ruaraidh. So thank you so much for joining us. We can't wait to talk a little exploration with you.
Okay, no, thank you. Thank you, Merrick, and thank you for having me, and looking forward to the discussion.
All right, it's going to be awesome. Mike, before we go exploring, what would you tell us about the markets or anything else?
Yeah, I'm just going to be real quick about it. I mean, bonds doing absolutely nothing here. There's no real economic stats that have come out this week or towards the end of this week. So maybe next week we should start to get a little bit more bond volatility. I'd say the big news in the energy complex is that crude oil is at, WTI is at 66.50. It's breaking out. This is the first time we've been at this level since August of 2024. Obviously, there's been a lot of bearish sentiment in the market because of the IEA report talking about 3.5 million barrels of oversupply in 2026. I think the market right now is moving on just Iranian issues. But I think what we're finding out is, even if, you have some, sort of deal with Iran and maybe crude pulls back a little bit, I think this notion that the market is oversupplied by 3.7 million barrels that IEA says is utterly ridiculous. And so, right now you're getting a little bit of squeeze in some of these shorts out on crude oil. The one thing I will end with is, the markets seem to be going sideways. They just don't have any real direction, continuing to see, sort of technology underperform, industrials outperform. I will say that energy today is up. It's outperforming. But if you look at energy year to date, it's up around 23 to 24%, far exceeding every other sector. Even some of these cyclical sectors are up 13, 14%. So, with that, Maynard, we look forward to talking to our guests about exploration. I'll hand it back to you.
Okay, awesome. Arjun, what would you throw in before we jump in with Ruaraidh?
Maybe just 2 quick points. One, to build upon what Mike was just alluding to, which is the very strong energy performance. And I think Mike said it well. There's always can be volatility. You can always have a pullback and these kind of things. But that longer term cycle we've been talking about, this recognition that the world cannot live on software alone. All software requires hardware. All hardware requires power. That's something the world learned about 2 years ago. Power stocks have done well. For the last 9 to 12 months, you've seen that extend into copper and some of the metal side that's important to power, and it is now coming to the energy side. So volatility will be here to say. Who knows what happens with Iran and all these things, but I think there's a fundamental underlying strength to energy that we continue to feel very good about. I think turning over towards our guest today, a theme that we've spent a lot of time at Super Spiked and at Veriton and at COBT talking about is this idea of needing to go international and global again. So no one should mistake us as shale bears. I don't have the view that shale is going to somehow just suddenly fall off a cliff. It is a large and massive resource, and I think can provide opportunities for the leading players for quite a bit of time. But that does not mean when it's been 90% of net oil supply growth over the last decade that it's going to be that going forward. And I think the world is starting to wake up to the fact that we're going to need to again be thinking about exploration. Who still does that? Who are our exploration companies? How many are really left in the US? What about the rest of the world? At the start of my career, Maynard, you didn't have to be a super major to go do international. There were plenty of smaller and mid-sized companies that do that. That doesn't mean every company should do everything. You got to figure out what fits to your strategy. But I think some of these themes of what makes sense, what doesn't make sense for different companies of different sizes, this theme of exploration international is going to be core to, I think, how we're looking, especially at traditional energy over the next 5, 10, maybe even 20 years. And what better way to kind of go about this than with our guest at Welligence today?
Fantastic. Well, great lead in, guys. Rory, I mentioned this is our third COBT this week. The team hates me, Rory. I'm teasing. But we've done 3 this week. And if you reflect on what we've heard, to Arjun's point, David Batt and Kimberlite was very bullish on all the things we're capable of in the subsurface. We're getting more productive. We haven't even really started using AI yet. We've got longer laterals. We get more production with fewer rigs. There's all these great things. So I would characterize that as a bullish on shale and shale technology discussion. Yesterday, one of our takeaways were, wow, real estate is getting short in the lower 48. Inventory is getting short. Things to do getting short. It is probably better to be a seller than a buyer. And there's just a real competition going on for what is in limited supply. And that brings us to where Arjun was highlighting, which is if you're worried you need more and you can't find it in the places that you've been for most of the last 20 years, you're going to have to go to some new places. So that's where you enter the picture. Let's talk about new places. And you might just give the audience a quick understanding of Welligence, and then maybe start taking us on a tour of where you guys see the new areas of activity around the world.
Thank you very much again for having me. So, Welligence Energy Analytics, we are a market intelligence firm almost exclusively focused on upstream oil and gas. Our platform gives our users or provides our users with the kind of tools and the intelligence they need to assess opportunities, to benchmark themselves against the competition, to identify where they should think about going next as they think about portfolio rebuilding, understanding geopolitics, which is incredibly important these days. And we really put a big emphasis on 2 areas to provide that high quality service. Number one, huge emphasis on data. So we expend a lot of effort acquiring data. Don't need to make educated guesses when you can let the data do the talking. So that provides us with a really robust foundation for a lot of the models that we built. But data is not everything. You still need the human intelligence side of things. So we make sure that our teams looking at the different regions are on the ground regularly, talking to the operators, talking to the regulators, digging beneath the headlines, right? There's often nuance beneath the headlines in the news, the press releases, to really understand what's going on within a company's portfolio in a country, to understand what's happening politically on the ground, this kind of thing. And so we bring the 2 sides together, the data, the data science with the human side of things, to build our platform and product suite.
I've probably been watching too many Netflix shows, Rory, but that sort of sounds like oil and gas CIA is what
Right.
you just described.
That's we might steal that as
Okay.
a marketing slogan. Yeah. Just to kick things off, we share a similar view with you in that we think we are going to see an increase, a step up in, let's call it, international exploration. So by international, I mean outside of the lower 48. We don't think, in terms of activity, in terms of a rebound in exploration wells, we think this year is going to still be relatively flat year on year compared to the last year. But and that's kind of evident when you look at the investment plans being announced by the companies so far. It's flat spend year on year on year. It's like 3 to 4 years now of flat spend. But beneath the scenes, these companies, and by these companies, I'm referring primarily to the larger ones. It is the larger companies, the majors, the larger independents, who are the ones who are driving the majority of exploration activity. they have been reloading their exploration portfolios. There's definitely a bit of an acreage grab ongoing by the majors, either through MOUs with governments, with the NOCs. So recent examples: Exxon teaming up with the Turkish Petroleum Company in Turkey, Black Sea, East Mediterranean focus. Chevron, shortly after them, did the same. Shell and BP partnering in Libya, not together, but partnering with the NOC there to look at acreage to test the potential. So, and then, of course, picking up acreage through bid rounds, farm-ins, and so on. So there's definitely been a exploration portfolio rebuild ongoing. Takes time, of course, to take that portfolio and start to mature your targets, your prospects, and so on. And maybe not this year, but certainly 27, 28, 29. That's when we expect to see a pickup in exploration drilling on top of what we're already seeing in the Atlantic margin and the East Mediterranean and so on. And it's needed. It can't come too soon. For, let's say, the last 12 years since you had the 2014, 2015 price crash, exploration or companies cut discretionary spend, obviously, as they look to protect balance sheets. Once you cut discretionary spend, sometimes it's hard to bring it back. And so exploration's never recovered from that fall. Budgets have been down, therefore activity has been down. And that's starting to play out now, because although we don't have any concerns over the next 3 to 5 years in terms of supply meeting demand, when you get beyond that 5-year period and we look at the hopper of pre-FID projects, let's call it, what's coming next after what's already in development and so on, it's not that solid a foundation for future supply. And that is the direct result of this pullback in exploration. So in our view, a return to activity can't come a moment too soon, because the companies do need to start to rebuild their that inventory of new developments when we get into the 2030s and beyond.
Ruaraidh, just to let me throw out a thought is, we're using the word exploration, and when you say exploration, suddenly your mind goes to, I'm in really, really deep water and it's going to be super expensive and, it's going to be really risky. And if it works, I'll make a gazillion. And if it doesn't, it's a dry hole, all that. But it just strikes me, we're probably using that term a little cavalierly, because we're just talking about new production. It might be onshore, it might be offshore, it might be high risk, high return, it might be moderate risk, moderate return. All these things come with different arrangements with the host governments. There's obviously, one reason to call it exploration is you might be in a riskier political environment. It might be an above ground thing, but maybe just tell us, when we say you're helping companies rebuild their exploration portfolios, let's define what that really means, if you don't mind.
Sure. So from a Welligence perspective, we are modeling, for a start, every single oil and gas project globally. So firstly, that gives a solid picture of the current state of play, where our near to short-term production growth is coming from, but also all the data points that you need in terms of costs and well productivity and how you might expect new projects to perform. Obviously, within established basins, the data points needed to do exploration analytics to understand the yet to find what's left to be drilled in those areas. And then you can start to leverage that to build out analogs for how new basins may perform, what you can expect in terms of timelines from discovery to first oil, what the development solution might look like, how you think about that development solution in terms of competing or service sector capacity. That I think the Transocean Valaris deal is quite nicely timed. We are about to enter a nice period of heavy deep water activity, and they're really well positioned to take advantage of that. But if you've got a development, how are you able to secure that capacity? So we're able, and then of course we're monitoring all the upcoming licensing rounds, the bid rounds, benchmarking the fiscal terms, understanding what's needed from that above ground perspective to make something work, which is in many ways just as important as below ground, right? If you could have amazing subsurface, but if the above ground doesn't work, it doesn't matter what you have below the ground. And you might see that start to play out right in Venezuela, given what's happened there. Low risk subsurface, it's always been about the above ground barriers to doing something there, and obviously many challenges, of course, to fulfill that country's potential. But you're now starting to see that some of those above ground obstacles lowered, and that can create opportunity. I think also it's not just about exploration for companies, the discovery of new barrels. I think also you're going to see a lot of the companies, especially the bigger ones, working hard to secure long-term contracts in those resource-rich countries where you don't need to explore, but you know there's huge resource. So primarily, I'm thinking about the Middle East. Some of the contracts that BP signed a very good contract a year and a half ago or so in Iraq that's going to provide a part of their production base for many years to come. The other majors who've maybe exited are thinking about going back in because exploration, there is a risk to it. And for the big guys, exploration has to deliver material volumes to move the needle. So there's a balance for them between the risk associated with chasing those big but higher risk opportunities, and then perhaps securing some of these contracts that have the guaranteed resource. Yes, the return may not be as obviously as good as it is if you hit the home run on the exploration side, but there's a balance to be had. So there's also an opportunity not just to find new barrels, which we think is needed, but also to fully exploit the existing barrels that are known to be in the ground and there to be exploited.
This distinction you just made, exploiting known resource versus finding new resource, like if you're the restaurant, what are people coming in and ordering the most? Do you feel your business is mostly focused on the exploitation side, or do you notice the new barrel truly exploration side growing?
I would say the latter has definitely come to prominence over the last 12 months, both in terms of the noise that you hear in the industry and the conversations that we're having, the queries that we're getting, what people are looking for. There's definitely a shift towards a focus on the exploration side of things. Not at the expense of trying to secure some of these contracts for the known resource. But that's also mainly, from what I've seen so far, the domain of the majors, right? The US majors, the Euro majors, negotiating those deals in the Middle East. But of course, they're not just negotiating those big contracts, they're also at the same time doing MOUs. Like Total signed an MOU in Kuwait to help to assess the exploration potential for new hydrocarbons there, and so on. Chevron have the MOU to look at Syria and places like that. So there's a balance, but in terms of the query flow and so on beneath the majors and so on, yes, there's definitely been a shift towards. Let's put it this way. Let's characterize it in terms of exploration. Previously, it was more about acquisition, and now there's definitely more demand for intel on the exploration side of things.
Maynard, I've got probably a dozen questions, but we'll just start with
exploring. Get in there.
Yeah, we'll explore these questions, right? Now, I'm really interested in the data, right? We talk always about the data, and when I think of data, I think seismic companies. I think about seismic companies 20, 25 years ago. Everybody in the energy world knew who they were, the ups and downs of that business. And so not so many people even talk about the seismic companies anymore. But so maybe what I want to understand from you is what is the quality of the data that's out there, the quantity of the data, and has that data been reprocessed, the seismic data with AI to create additional opportunities? What are you seeing on that end?
I think there's a massive opportunity on that data side of things. There's a lot of basins that companies had left that where you only had old 2D seismic data available, or the data just hasn't been processed and put to the test with all the latest enhancements that have been made, especially on the AI side of things. Like seismic is tailored, seismic data, the volume of data you have there's tailor-made to apply AI to and shorten the time frame from a seismic acquisition to turning that into leads, to turning that into prospects and drill-ready targets, right? Anything you can do to shorten the timeline is a massive win. So I think there's huge potential in basins that companies walked away from in the 2000s and in the late 90s and early 2000s to return to it and apply or to often to acquire new seismic, but then mend that with these latest technologies and that they're able to apply. So a good example for is Exxon exited Trinidad 20 years ago, more than 20 years ago, but just last year, through direct negotiation, secured a huge part of the deep water in Trinidad's eastern waters. So an area, a basin that they drilled, didn't work back then, but now come back and acquire new seismic and apply all these technologies. And maybe, hopefully, then they can start to see things that were not visible before, things that were overlooked in the past. I think also not just going into basins where you need to find something brand new in that sense, but also established basins where you can find new plays that weren't there before, so or weren't identified before. So Tano Basin, offshore Cote d'Ivoire, right? But Eni, great stuff with the Baleine find, and now they've followed that up with another discovery they just announced earlier this week. I think it was a different play, but that basin has been producing for decades. So that was a good recent example of a company going back into a basin that on the surface was mature and perhaps the best targets had already been drilled, and perhaps you're now in a situation where it's more about ILX type drilling, right? Near field opportunities, this kind of thing. But no, you and I went back in and they made the biggest discovery ever made in the basin. And now they followed it up with another potentially world-class discovery in a different play. And that's a good real-term or near-term example where a company's been able to go back in and discover something that had just wasn't on the radar when the initial exploration took place in these areas.
You know, and that kind of leads me into my second question is really, I think most people think exploration is the domain of the oil majors. And the reason I asked that seismic processing, AI question is it seems like if you're able to basically reprocess, lower the risk, even if you can basically identify smaller fields, that seems like, something where smaller players outside the oil majors can now feel comfortable getting, legging into that market. Are you seeing sort of sort of larger cap oil companies thinking about what is the tenor of, the people who are asking for your data right now? Is it solely the oil majors, or are we starting to see it diversify further downstream market cap?
I would say below the majors, the companies looking for that data are the companies who never really stepped away completely from, let's call it conventional exploration. So Murphy Oil, Cosmos, albeit they've switched their exploration strategy from kind of wildcatting to ILX only. So you've kind of got that mid-large cap range where if they never stepped away from it fully, they're actually in a really good position to come back to it and look for it. What we're not seeing so much is beneath that level of company returning to, let's call it the more expensive, higher risk exploration. And one of the challenges, I think, when you get below, when you get into that kind of small cap domain, of which there did used to be a good number of them, especially offshore, that was their business model. Yes, technology can lower the cost and give them access to a resource that maybe they didn't have before to deal with the data side of things. The challenge is still, I think, for these guys, the financing side of things. It's securing the dollars needed to actually go out and drill $100 million well. The institutions aren't at this stage yet ready to provide that funding to these entities, particularly with the timeline, right, from securing acreage to potentially actually producing your first barrel and starting to generate returns, right? It's with ILX, it's a very long timeline still, but anything you can do to shorten that timeline, so the technology can help you during the exploration phase, getting smart on your development strategy through contracting strategies. Maybe you don't need to develop the whole thing in one go, phase development. There's ways, anything, and the majors are doing this, is starting to do this more as well. Is anything you can do to shorten that timeline to first oil is a win. But it's as Arjun mentioned when he started his career, there was lots of companies active offshore in the exploration space. Now they're a bit of a rarity. The likes of I think the most prominent example that springs to my mind is Sintana Energy, purely exploration focused, Atlantic margin specialist, nice position offshore Namibia, Orange Basin. They just acquired Challenger Energy Group. That gives them the South American side of the margin as well, offshore Uruguay. They've got Chevron as a partner. So they're a great example of a junior that is still very exploration focused. That's their business model. But they're like an edge case. There's not many other companies like that around. So it's still, I'd say it's the exploration that counts, that moves the needle, is the majors, Petrobras, some of the other NOCs, and then your kind of larger caps who still have that function. I would also, and we'll probably touch on this in more detail later, it's not just about conventional exploration, right? That's kind of what I've talked about mostly so far. You do have a step up in interest in international shale now. So you are starting to see some companies making moves. So Continental's gone into Argentina, and they've not just gone in there in an exploratory context, they've actually gone and bought their way into assets that are producing. Massive potential, of course, in the Vaca Muerta, one of the key growth plays going forward. EOG never stepped away from the international space, always kept at least a small footprint in Trinidad. And they've been stepping out. They've done some work in Oman, didn't work, but now they've got acreage in the UAE and Bahrain. They're looking elsewhere. And then some of the other larger, I think Devon in the results just yesterday said they're looking international. And that doesn't mean they're making a return to conventional exploration. If they never gave up that function, they will. But actually, they're looking at the international shale opportunities and taking that expertise that they have right now and going out to Argentina, to Turkey. In the case of Continental as well, they went there. You've got the North African countries, the majors are looking at the shale gas potential in Algeria and so on. You've got Tambourine Resources in Australia and so on. And this is a good time for these companies to go out and do it, because what they can do, they bring their technology, they bring their expertise, and they get first mover advantage. So why not go to these basins, do that early work? Not a massive capital commitment, right? You're evaluating the potential, you're doing some testing. You do it right, you're in a real strong position to negotiate access to the best acreage and start to move forward to full scale development. So that's the other area is these kind of US shale specialists, the larger ones, starting to look at these international opportunities.
Right. I think you got into part of my first of maybe two questions for you, which is you mentioned at the start in your remarks that we have a little bit of a land grab going on amongst the larger companies right now. And I was wondering if you could highlight some of the key themes to that. It sounds like international shale is one of those key themes. What else are you seeing in terms of, is it regional, Middle East kind of stuff, North Africa you just mentioned? I don't think we're seeing the higher risk true wildcatting exploration. Is it a change in contract terms that used to be very tough in some places, now perhaps getting better? I'm curious if you can just maybe touch upon some of the key themes of the land grab that you specifically alluded to.
I think it's there's a mix going on here. So some of it is picking up acreage in frontier areas through, let's call it, competitive bid rounds and whatnot. So examples that spring to mind. I mentioned Exxon going back into deep water Trinidad. Exxon and Chevron have both picked up acreage offshore Greece through the bid round they had last year. And then, of course, Brazil. People sometimes forget about Brazil, but still loads of potential. Equatorial margin, Pelotas Basin. Brazil is far from being fully explored, even if the pre-salt's not quite delivering the volumes it did in the past. Still plenty to look for. And so Exxon, Chevron, Shell, right? These guys, they've all been very active in recent bid rounds. And to your point about contract terms and so on, you are seeing countries recognizing that they do need to compete for capital. In the past, it was more the other way around. The countries could set the terms. They could be quite onerous at times, but there was a lot more financing available to the sector and a lot more competition. It's kind of the opposite now. So, Brazil over the past few years has made its terms more attractive to work for companies. They've dropped the drilling commitments, right? That kind of high cost commitment obligation is not so much there. Now what they want is companies in country with acreage, working it up through the seismic acquisition and trying to identify targets. And then if they want to, then you go to your next phase and start to drill. I think, and then on top of that, so that's kind of acreage taken through bid rounds and so on. Then you're also seeing direct partnerships being established with the NOCs in certain countries. From what I can see so far, it is mostly a Middle East, North Africa phenomenon. So Exxon, Chevron, Black Sea focus, Chevron with that agreement to look at the potential of Syria. You've got Chevron, Exxon. I don't think it's finalized, but I believe they're close to maybe getting an agreement in place for Algeria to look at the shale potential there, which is absolutely enormous. Now, what do you have in these countries is you've got a hungry market, especially for gas in Europe, especially with the plans to essentially cut off Russian pipe gas completely. So the Black Sea is gas prone. Some huge discoveries have been made. Yes, of course, some recent exploration disappointments as well, but still enormous potential there. Algeria, shale gas. They've got 3 pipelines that are already in place, connecting them to Europe. So this is not going into truly frontier areas where there's no infrastructure and you have to try and convince someone to build a multi-billion-dollar LNG plant to get your gas to market. You just need to go in and prove up the commerciality of the upstream side of things and get going with that, because the infrastructure is there to get it to market on the gas side of things. So it's a kind of multifaceted approach from these companies, and then of course there's farming deals here and there. So Chevron, going back to them is my example. They've been super active over the past 5 years, building up Atlantic margin exposure.
You're doing a good job of anticipating my questions, because the next one would have been some of these producing country NOCs, which I might differentiate from consuming country NOCs. But the producing country NOCs, I can appreciate bringing in some of the Western companies to help with their shale opportunities or what have you. Makes a lot of sense. Are we seeing any of them venture out? I think it's well known that ADNOC has its XRG subsidiary, which is looking at different regions. Besides that one, are we seeing any trend of NOCs looking outside of their home country?
So of the producing NOCs, slowly but surely. So the two most aggressive in that space has been QatarEnergy and ADNOC through XRG. So QatarEnergy have been at it for over a decade now, using that phenomenal gas resource that they have at home to leverage partnering opportunities in some of the hottest exploration basins out there, whether it's Brazil, whether it's in the Guyana Basin on the African side, and they continue to build up their exploration exposure. They have stayed very clearly away from acquiring assets. They are very much about partnering with the majors, ideally, and creating value through the exploration drill bit. Then you've got ADNOC, XRG. They've been very aggressive, and they're buying. So they've built up material positions in Egypt. They went into Mozambique. I think it was Kazakhstan or one of the stands in Caspian. They did a deal to build exposure there. Of course, they did try to buy Santos last year. That didn't work. That would have been a huge move to bulk up their international gas portfolio and the LNG business. So there, I would say they're the two who are the most aggressive from a NOC producing perspective. What we're also seeing is Petrobras making a return, so to the international space. So by that I mean outside Brazil. And that's because although the pre-salt is underpinning strong growth from Brazil over the next, let's say, 5 years, right? Brazil is the key source of non-OPEC growth over that time frame. When you get to that point, then it's to the point I made earlier. Petrobras kind of encapsulates it. What comes next? They don't have that hopper of pre-FID projects. In fact, if you look at their latest business plan, you'll start to see some of the planned new FPSOs, and these are good things to do, but some of them are revitalization FPSOs. These aren't FPSOs going on to greenfield developments. They're putting them onto older legacy projects where the infrastructure, there's too much capacity there, and they're going to replace it with a single FPSO. So it's a good brownfield development type thing to do, but also indicative of them starting to run out, I think, of the opportunities that they once had. So, they were reportedly interested in buying a stake in Mopani, offshore Namibia. Obviously, Total got in there, but they've picked up exploration acreage, Sao Tome and Principe. They've gone into South Africa. They are looking very closely at Nigeria, going back there. So you're starting to see Petrobras going back international into places where they can leverage their strengths as the number one deep water player. So they're doing that. Another example, although they haven't done anything yet, but I anticipate they will, is Ecopetrol. We'll be watching Venezuela very carefully, and I would anticipate that they will start to make a move and start to partner up with the Venezuelans to start to develop some of that resource that you just know is there, and it fits Ecopetrol's skill set. Their skill set matches the opportunity in Venezuela. But yeah, to your earlier point, you slowly, right? Saudi Aramco went into Iraq. That's their only international upstream position outside home base. There's a few baby steps here and there, right? Outside of ADNOC and QatarEnergy, they're the two who have huge resource at home and will produce millions of barrels of oil equivalent forever. But they're the ones who've also made that move internationally.
I'll turn it back over to Maynard, but maybe make my own editorial comment. It's really interesting, Rory. Your comment on the pre-salt sort of getting to a more mature stage. I did not appreciate that. I do remember Petrobras in decades past being international, but to hear that, I think your Ecopetrol to Venezuela comment is super interesting. We had Ali Mashiri on a couple of weeks ago, and I think there is this question of who are going to be the companies to kind of go back in there and what timeframes. That's a natural one that you just mentioned. And then to hear some of these countries that I think both for country and corporate development for their large NOCs are thinking about these things, but in part also a statement on maybe their own maturity. Like it's really interesting stuff. It's a lot of fun looking around the rest of the world. You mentioned Murphy. The other is the Anadarko. Who's our next Anadarko? I can't wait for that. It was a fun company to cover. But it's very insightful to highlight some of these NOCs, both from a maturity of their country perspective, but also the skills they offer to some of these other countries. Like, it's going to be a fascinating area to watch. So
Yeah, no, for sure.
All right, Rory, I'll throw you a curveball. Just thinking out loud, Russia, major producer, obviously in the penalty box right now. Their production goes somewhere. That's not really my question. Is how do you, as someone who's watching the space, and it could be, I know there's no current activity around it outside in, but how do you think about Russia as a variable in the world of exploration, future supply, future projects? How would you think about that?
So, I mean, I guess it's depending on what happens. Actually, Iran could come into play from that perspective before Russia does. But uh, I guess Russia, it's more about the known resource that you have in the ground, at least in the short to medium term. It's never been a big exploration play. Well, no, never say never. That's completely wrong. I would say in the time that I've been looking at the
Karacy, not to
industry,
interrupt you, Karacy was big for Rex
yeah,
Tillerson, and then that led to all that it led to. So,
yeah. Um, but it's never attracted significant exploration spend from the IOCs and so on, with one or two exceptions. And I don't see that necessarily changing. It would be if it opened up, it would be an opportunity that comes still with a big caveat around the above ground risk side of things.
I'll throw you another one on sort of the flip side of the equation. We spent some time a couple weeks ago talking about all the amazing growth that's going to happen in India and how energy policy is very important there. Uh, Coal will be a big part of it. Solar will be a big part of it. LNG, I'm over my skis, but there'll be a lot of things that are a part of it, but you don't hear a lot about oil and gas exploration, domestic production. Is there anything going on there? Because energy seems to be vital to the country's planned growth.
There's exploration activity taking place in the deep waters. They have had some successful licensing rounds as well recently in the past few years, where BP, who have obviously one of the established IOCs in India, have picked up acreage. There is some very interesting activity taking place in the kind of, let's call it the South Andaman Sea kind of area. So it kind of straddles the borders with Malaysia, Indonesia, Indian waters, and so on. And some of the key wells that are coming up, both on the Indian side and also in Indonesia and so on, are really testing the potential in that particular part of the broader Indian Ocean kind of area. So there is definitely a step up in activity, largely driven by the ONGC and so on in their role as the NOC. And that's going to be a mix of oil and gas targets that they're going after. This is a part of the world, especially as you move closer to Southeast Asia, where gas is a legitimate primary target for the higher risk exploration. Where you've got infrastructure already in place to facilitate the development of that gas resource. You have hungry domestic markets as well, providing you, as you already know where that gas can go. So India is definitely a place that we're watching closely from that exploration perspective. There are some high impact wells that are being drilled or are set to be drilled over the next couple of years in that part of the world. But we don't bracket it in the same plane as like an Orange Basin in terms of that true impact that it could have in terms of needle moving discoveries and so on. Those other areas still have much more activity and involvement from the bigger IOCs and driving that activity levels forward.
So what are some areas? I mean, you've touched on them. David Batt touched on them because he was showing places with increasing activity. But if you had to think about 4 or 5 areas to focus our audience on that are,
Yeah,
either
let me.
their current hotspots or they're experiencing real pickup in interest? Like, give us sort of Rory's top 5 areas of the world to
Yeah,
watch.
right. Let me just see if I can. I'm going to share my screen. Okay. So here's our map of the world. The yellow dots are all exploration wells in the conventional space that are either ongoing or that we have line of sight on over the next, let's call it 12 to 24 months.
Okay.
The pie charts show our unrisked estimate of the resource that companies are targeting in these different broad regions of the world. Now, my kind of top 3, top 4 areas for activity in this time frame. We've already talked a lot about the Atlantic margin. So that's, of course, on both sides of the Atlantic, the African side and the South American side. You can see that's where the majority of exploration activity is focused, both testing new basins, like the Plotas Basin in Uruguay, trying to make that work. That's a direct analog to the Orange Basin in Namibia, but also, key wells being drilled right now. You've got Brazil's equatorial margin. So off the northern coast of Brazil, Petrobras is drilling ahead at the Morpho prospect in the Foz do Amazonas Basin. That's right next door to the Guiana Basin. And that's a key one to watch, because if that comes in, then that just starts to unlock Brazil's equatorial margin areas as well. Another area that I personally always keep a close eye on, and it's not always on the radar, is I like Alaska. I think the subsurface is great. Tons of potential still to go after there. Alaska is actually going to be one of the other key sources of non-OPEC production growth in the coming years, with Santos bringing on Pikka and Conoco moving Willow towards first oil. And that's coming from what's known as the Nanushuk play. So this is a good example. It was Armstrong Energy that delivered this, going back into what was considered a relatively mature area, the North Slope, and reprocessing the seismic, looking at it in a different way. And lo and behold, you discover this Nanushuk play, a stratigraphic play that wasn't on the radar previously. And so multi-billion barrel potential. Of course, fully appreciate Alaska has challenges from an above ground perspective, logistics, costs, and so on. But there's some interesting drilling going on up there, both by the larger guys and also some smaller guys that could yield large discoveries.
Rory, can I ask you, since you mentioned Armstrong, offshore Venezuela, Aruba, that part of the world, what do you make of that?
Aruba is interesting. That is where Armstrong has PSC that they're working up to identify drill-ready targets. I know what they see, at least conceptually, are giant targets, billion-barrel targets. Very exciting. Some of the bigger guys have been in there before. So Shell and Repsol were there. I think there was an unsuccessful exploration. I think it was around 2014, 2015. But of course, you can't just write off an opportunity on the basis of a single well. That failure, of course, also coincided with the general pullback from exploration spend. So not a surprise in that context that they walked away. But very interesting moves by Armstrong. Of course, they have a super strong exploration pedigree, very technically astute, and hopefully that will manifest as drill-ready targets, and we'll see what happens there. Offshore Venezuela, there's a ton of resource waiting already offshore to be exploited. It's gas. It looks like it's mostly a gas play. And it should be, from a development perspective, it's easy to exploit because they've developed that type of resource for decades just over the border in Trinidad. So there's a path to monetization. Trinidad is gas hungry. Shell's well placed to start to develop that Venezuelan gas offshore and bring it through Trinidadian infrastructure. the Atlantic LNG project, and so on. So I don't see much movement on Venezuelan offshore exploration. I think there's already enough what would fall into the stranded gas bucket to focus on before companies really start to think about exploring offshore Venezuela.
So, Rory, one of the notable exploration successes of the last year or so was Murphy in Vietnam. Anything you'd share about what's happening in that part of the world?
Sure. So Murphy, of course, have had not just success this year, but they've had a run of success there with discoveries, and they're set to start production in the near term from their first project there. So I think it's a great example of where a mid-cap type company can find success. You don't just have to chase after the extremely expensive, high-risk frontier areas. There's still good targets, good prospects to go after within more established, more mature areas that perhaps some of the bigger guys have left behind, and that can create space for companies like Murphy. And perhaps that is an opportunity with so few companies out there like Murphy in that kind of middle spot who can still take on semi-costly exploration, but not put all their eggs in one basket in a frontier area. It's a good example of how a company like that can go in and create value and bring that expertise when there's not that much competition around them for the acreage and for those opportunities.
Interesting. So, Rory, we're going to lose you shortly. You've been very generous with your time. Could you take, if you don't mind, 30 seconds each on, you've got a great chart on just the total amount of exploration, going back to 2010. I think people would love to see that. And also your quick international shale hotspots would be great.
Okay, you're referring to this as the spend side of things?
Yes, sir.
Yes. Okay. So this chart is really underlines the point that exploration has been dialed back massively for 10 years plus. So what we're showing you here is the reported exploration spend for most of the public companies in the sector. Each color represents a different company. All the majors are there: Petrobras, and then the key independents, the Oxys, Concos, Cosmos, and so on. Now, the main message here, of course, is you had that peak in spend in 2012, 2013, and then the price fall came in. The focus of the sector switched to capital discipline, shareholder returns, returning cash to shareholders. Discretionary spend got cut, and that is very reflected here in that fall in spend. And you can see from 2016 onwards, it's never recovered. It's never recovered back to those levels. And I think once we see the 2025 numbers come through, it's going to be in line with 24 as well. But we do anticipate, we think the conditions are there to provoke an upswing in activities going forward. As discussed, a lot of acreage reloading has taken place, and companies are preparing themselves to drill more. Chevron, in fact, without putting numbers out there, has said it's planning a 50% increase in exploration spend over the next 5 years. And my assumption is that the majors and so on, the other majors, its peers are going to follow suit on that front. So yes, so it's very clearly shows the fall in activity based on the levels of spend. But I think we'll start to see an uptick. And then I guess just to close out, if I jump to this slide here, yeah. So this is just showcasing some of the movements that have been made in that international shale space. So loads of focus on Argentina. Mentioned Continental had made its move, and XRG has also not gone into the upstream yet in Argentina, but they've signed up to partner with YPF and Eni in one of the planned LNG projects, and lots of other interest from US shale specialists in what Argentina has to offer. Touched on the potential for shale gas in Algeria. Exxon, Chevron looking very closely at that. Continental also going into Turkey, EOG doing good things in UAE and Bahrain. And then you've got Tamboran Resources as well in Australia, in the Beetaloo Basin, huge gas potential there. What is kind of interesting about them, and this goes back to the comments earlier around development timelines and trying to get to revenue faster. Huge potential in the Beetaloo Basin, but it's interesting to note in some of Tamboran's recent messaging through their investor presentations and so on, whereas previously they talked about the gas as being a supplier to new liquefaction plants for export greenfield projects. Now that's switched to actually, at least initially, using the gas to backfill existing projects, using the gas as a supply source for an expansion on an existing project rather than establishing new facilities. And that makes a lot of sense because it's gas, the infrastructure is there. Yes, you'll need to build the pipeline and so on to get it there, but you're then not at the mercy of multi-billion-dollar financing to construct new liquefaction projects, particularly at a time when you already have a huge amount of planned build already underway in that LNG space. There is expectations that perhaps it will soften, the market will soften in the next decade. So it just makes absolute sense to adjust your development plan and find a faster way to start to generate cash flow, to generate revenue sooner, rather than going for that home run straight off the bat.
Awesome. Well, Ruaraidh, I promised we would let you go. Can I have a bonus question as you go? It can be real quick.
Sure.
You're kind, sir.
Yeah.
How often in your day are you using AI to make your job better, make the calculations quicker, help a customer get an answer quicker? Like, what is the AI from your personal perspective in all this?
Say there's probably two angles. So we've always used it in the data-rich countries to help process the information, to help us generate our production, our decline curves, the type curves, and so on. Using it to backtest itself against what's actually happened, making those constant self-correcting adjustments to the algorithms and so on. So that's been very much at the heart of Welligence from day one, is making full use. But obviously it's moved on a lot in the last, since we came into being 8 or so years ago. The other part where AI can really make a benefit and free up a lot of analyst time to actually analyze and create value and intelligence on the sectors is using it to help to assimilate and digest information, mass amounts of information quickly. So using it to look at technical papers alongside news flow and so on, and not relying on them completely. You can't do that, but it can really accelerate that process of understanding and digesting that information and helping to draw out the key points and what you need to focus on. So that's also a big space where we can see it really helping free up capacity from a human perspective to then create the more forward-looking analysis and draw out insights from that data.
Fantastic. Well, Ruaraidh, you've capped off our 3-part NAPE series here. Fantastic. We really enjoyed this conversation. Thank you so much for walking us through all that.
Well, no, thank you very much. Thank you very much for having me, and hope to be on it again, maybe after there's been loads of exploration success.
Hey, there's lots to watch. Billions of barrels at stake here. Thank you so much, Ruaraidh. Thanks, everybody.